So I finally reached another milestone in my portfolio. We've finally reached a $15,000 value. Despite the stock market generally trending downwards, it has been trending upwards, especially finishing in the green today as I record on Tuesday. And so I'm going to set a new goal here. The portfolio can definitely fall out of this and go under, but it's just nice hitting the goal that I set out once I hit my first goal of hitting 10,000. So for the next goal, I'm going to say I'm going to try to hit $25,000, which is about the quarter of the way to $100,000, which is another milestone I'd like to reach eventually, but we're going to take smaller goals along the way. So if you want to follow along with my stock portfolio that I have here on YouTube, you can like the video, subscribe, comment, and share the video. And with that said, I'll start the intro and then I'll get into the buys and sells. So starting off with the TFSA, we're up 82.77, or up 1% today. And then for the all, we're up a little bit in the green, up 3%, 465.86 all time. So despite a lot of portfolios in the market being down overall, we're still in the green, even though I kind of started in the time when stocks were a lot more expensive than they are now. But overall, nice little growth in the portfolio. I'm not as concerned with the value. It's nice, but we're trying to build a stream of passive income. And we're just buying companies like Apple that pay dividends. So Apple recently had a presentation, and the key things that I were really impressive in the showcase that they had was that they can now accept payments just using an iPhone. So you don't need like a POS terminal or any other hardware. You can literally just run a business from your iPhone and accept tap from other iPhones or like a credit card or debit card, all from your iPhone. So that's incredible. And this definitely shows that Apple can just replace other businesses. And that's why a lot of technology companies I generally like to avoid, because Apple can just simply turn on a feature on their phone and kind of, render your business, kind of pointless, right? Like, why would you need a POS machine when your iPhone can do it for you, right? Why would you? As a small business, like, you can save a ton of money, just use the phone you already have, and that's fantastic. And I can even think of other applications like sending money to friends. Like, imagine just tapping each other's phones rather than sending an e-transfer. So there's definitely some cool applications there. And they also unveiled Apple Pay Later, so you can actually use financing. So this is disrupting those companies that, like PayBright or Afterpay. Apple's just doing their own thing where you can make equal monthly installments and you pay them later. So yeah, again, Apple can just go into any industry they want, leverage their current ecosystem, and just create a new business for themselves at will. So great company. We're back in the green on this one. I definitely think it's still trading at pretty attractive levels. But I did stock up on it, so it is my second largest position. So I'll be focusing on some other stocks. Unless Apple falls back into the low 140s or 130s, I'll probably just hold it for now. And Alibaba's had a pretty good rise back up to over $100 a share. So they're doing pretty well despite the rest of the Chinese economy not doing so hot, but that's just due to lockdowns and mostly a result of the Chinese government. So despite that, it's shown growth. So I'm guessing the sentiment is warming up on Alibaba because they seem to be growing in a time when Chinese companies are not doing well, and that's mainly just due to the Chinese government and locking down the country. And we also purchased a little bit more Scotiabank, so just a couple dollars here and there. I just made a small deposit in the past week, and we rolled up to over 14 shares. So they recently raised their dividend by 3%. So great time to add this one, and I'll just be doing that for a while, just because I think it's trading at a pretty decent level. It's one of the cheaper banks in Canada and pays the highest dividend yield of all the Canadian banks, while I think offering pretty good growth potential relative to the other banks. I think only really TD or BMO could probably outgrow Scotiabank, but they're diversified in the Latin Americas, and TD and BMO are in the US, and I only hold TD. There's no reason for me to hold BMO as well, because it's just too similar to TD in the fact that they have Canadian and American banks. And our portfolio is doing pretty well. I got 3 more shares of the Ethereum ETF just because, again, crypto, anything risky right now, the market just doesn't like at all. So I bought 3 more shares of this. So we're up to 50. And again, a stock like Loblaw is doing very well. So this is giving me my grocery store and kind of healthcare exposure, since they own Shoppers Drug Mart. And I think right now this is just a hold. I might add some shares if it like drops below 110, but I think right now it's just a hold. I think there are better opportunities out there in the market, so I'll just continue to hold it. I don't find it extremely overvalued either, so it's just a hold in my opinion as of right now. And I've kept averaging into Microsoft, so we're up to 1.5 shares of Microsoft. So I kind of stocked up on Apple, and I wanted to get a little bit more Microsoft in the portfolio, so decided to add a little bit more Microsoft. And for real estate, I'm going to be adding some smart centers soon, just because I like the levels it's trading at. And the real estate sector, I think, is pretty beaten up, so I think real estate and like tech stocks are pretty good values right now, along with some other like growth stocks that are completely beaten down, that are out of favor at the moment. So those are definitely better opportunities, at least in the market as I see today. Although you could get a good return across many stocks right now. And for TELUS, I actually picked up 3 shares of this. Again, I love the fact that they raise their dividend twice a year like clockwork. They're expanding their revenues, and I believe their expenses should be going down in 2023, so the cash flow should be even better. So TELUS is just a rock-solid dividend payer. I kind of want to get this up to 100 shares, because that would give me enough money to buy a free share of TELUS every 3 months, and I kind of want to do that with the banks as well. Just have these staple core companies in my portfolio, like the banks, TELUS, Apple, Microsoft, and the rest of the companies, I'm going to pay more attention to their relative value, and maybe trade them or sell them when they're overvalued and look for better opportunities. But there's definitely some staples in here that I just want to hold and could probably hold indefinitely, unless they're super overvalued or something changes with their business. And with the RRSP, I only hold 1 stock in this portfolio. So it's just Starbucks. We're down $26 or down 5%. I only hold Starbucks. So I got my first dividend from Starbucks, so that's pretty nice. It was about $2.58. So I actually decided to deposit another like $20 and just put it towards more Starbucks, just because it allowed me to average down on the position and own a little bit more of the company. So we're up to 4.5819 shares of Starbucks. So restaurants are also another sector that is out of favor right now, and I do believe Starbucks is a quality business with pretty good margins and pretty decent growth ahead of it. They should grow the dividend at a nice rate, and it seems like a solid place to have some money right now. So that's why I'm choosing to invest in it. And the CEO even bought about $10 million of shares. So that's always nice to see, insiders in the company buying the company as well. There's only one reason for a CEO to purchase stock in their own company, and that's to make money. So if he's buying the stock, it must be because he finds that it's trading at a good value or undervalued. And for the dividends earned, we've earned $536.22 since starting the portfolio. Annually, we increased from the last update. We went up roughly $1. Not too much. I made a small deposit, so not much changes here. Monthly average went up by 8 cents a month, and daily we're about the same. And our next goal is to hit $3 a day, so we just gotta keep depositing and reinvesting the dividends. For the month of May, we've earned $52.51. And one thing I want to key in on is just the all-time growth, just to show that going from like $0 in February of 2021 to as high as 77, like almost $77, and then like $52 seems to be our new low right now. So it's pretty good progress. And in terms of the breakdown of the portfolio, you can see that TD is my largest position at 10.1% over here. Apple is 9.1%, so our second largest position. So I'm starting to take advantage of this downturn by just allocating the specific portions of each company. And when the prices are down, you really have the freedom to do that. When there's certain sectors that are just over, or stocks that are overpriced, you really can't do that. It's a lot more limiting. I'd probably say when things are really, really overpriced, that's the most challenging environment to invest in. So your job is to find the best value you can in those environments. But in a market like this, you can really look for the most beaten down thing and try to maximize your return. If you have a long enough time frame, it just depends on your goals. And another thing is my dividends for the year of 2022 has already surpassed what I earned in 2021. And we're just starting June, right? So we're only halfway through the year. I've already received more dividends than I did last year. And this is why I love dividend investing in general. And pretty much every company I own pays a dividend. So if you want to start getting invested yourself, feel free to use my link in the description below to join Wealthsimple. And you can buy and sell Canadian listed stocks and ETFs with no commission fees. And if you sign up with that and you make a deposit in a personal account, you can get the value of a stock worth up to $4,500. All right. So let me know in the comments how you're doing with your portfolios, what your plan is, and leave a like and subscribe to the channel. Have a good one.